Rebecca, is the AI hype and kind of craze real? Can we trust it?
So Goldman Sachs expected that the artificial intelligence will bring in roughly 7 trillion of market growth in the next decade. And so since the launch of ChatGPT last year, we've seen a surge in mention in news. So for instance, in news article alone, ChatGPT was mentioned 113,000 times. And so this is a 6-time fold. If we look at the growth in terms of how many users entered ChatGPT, in less than 2 months, they reached 100 million users. And so to put that into perspective, for instance, Uber took 6 years. Spotify took 4 years, and Instagram took 2 years. So there's huge interest in AI. And I think what's interesting about this is no one really knows what AI is going to become in the next 5, 10 years. And so it's going to affect everything from healthcare to financial sector to even the retail space. And so there's tremendous potential for AI, and everyone's interested in talking about it right now.
Yeah, obviously a lot of potential for ETFs and AI as well. What's happening in that space?
So in the ETF space, there are currently $13 billion worth of assets in the AI, robotics, automation space, and there's only 60 ETFs. And so we expect that by 2030, this number is going to increase 3 times. So we expect roughly 35 billion by 2030, and we expect that to have more than 150 ETFs. So it's going to be a huge growth.
So what type of AI ETFs are there? When you put all this information out, it sounds like a very enticing possibility to invest in.
So there's really 2 types of AI ETFs. The first one are ETFs that track AI companies. And so the classic example would be like ARK. They tracked AI ETFs. But most recently, we've had Roundhill Generative AI and Tech ETF launch in May, earlier this month. And so that's the first group of ETF. The second group of ETF are really ETFs that utilize artificial intelligence. And so, for instance, in Korea, we have Quarf. And in the US, we have a AI-powered ETF. And these are ETFs that have some sort of quant strategies or artificial intelligence. So, for instance, they utilize, for instance, in the US, there's AIEQ, which is powered by the IBM supercomputer, and so they are analyzing data all day long, 24/7, and they claim that they can do the same work as 1,000 research analysts. And what we have found is that between these 2 groups of ETF, the ETFs that track AI companies tend to perform better. So for instance, they have a return of 20% versus the ETFs that use AI only return 3% this year. And we also found that between these 2 groups, the ETFs that track AI companies are also a lot cheaper. So on average, they're 54 basis points versus 75 basis points. And so there's really 2 types of ETFs, but the performance and the fees are drastically different.
So a lot of enthusiasm around this space, but is there something investors should be cautious about as well?
So I think what investors need to be cautious about is FOMO. Since NVIDIA's earnings last week, we've seen a huge interest and boom into this space. So for instance, semiconductors on Thursday had the most inflows they've ever seen. So for instance, the iShares semiconductor got 800 million worth of inflows, and this is the most it's ever seen since 2001. And if we look at the overall tech sectors, we've seen billions of dollars worth of inflows. So between the leverage and the inverse ETFs tracking whether it's semiconductor, tech, there's even a NVIDIA 1.5 time leverage ETF that had huge amounts of inflow. So every investor is currently looking at this space. And what investors really need to be careful of is that there are so many ETFs that track tech, that track automation, track AI. And so you really need to be careful of which ETF you're buying into and investing into, because as we mentioned before, not all ETFs have the same return and they don't perform the same. So for instance, if you look at ETFs that track the AI names, so NVIDIA, Microsoft, Amazon, those tend to do better than the ETFs that utilize AI. And so when you look at this, you really need to do your due diligence and really look into the right ETF and not chase the wave. Because everyone right now is just pouring millions of dollars into ETFs, especially in the tech names. So you really need to be cautious of what you're investing into.